All right, guys, Alec back with another stock market investing video. Today we have a really good one. Before we get into that, you'll actually see in the last 3 months I'm up 20%, 19 to be exact. So if you need a little bit of help growing your account, getting 20 to 30% a year, go ahead and hit me in the DMs. I'm accepting a few more people. But let's get right into the video. Today we have an exciting video for you guys. It's all about ETF, exchange traded funds, and what they are, if they're for you, if they're good, if they're worth it, if they can make you money. So here you'll see right off the bat some of my ETFs, some of my favorite ones. I'm going to give you the inside on the best ETFs. So on top of learning about ETFs and what they are and if they're for you, we'll also go over the very best ETFs to be looking at and what you should have on your watch list and what you guys should be buying as well. All right, so let's get into it. What is an ETF, exchange traded fund? An exchange traded fund is a type of investment fund, an exchange traded product. They are traded on the stock exchange, are similar in many ways to mutual funds, except ETFs are bought and sold throughout the day on stock exchanges. So you might hear about mutual funds. They're actually pretty much the same thing. I kind of want you guys to think of them as the same thing. The only good thing about ETFs is they have lower cost management. So you don't have to pay as much in fees. And on ETFs, it's like 0.03% or something. So don't even worry about the fees anyway. So this is the best way to think about an ETF as well. So you can kind of see this visual here where you see a bucket and you see a bunch of small companies, or big companies, I should say, into one ETF. So it's kind of like, if this is a good way if you can't buy fractional shares, you might want to look into ETFs, because they pretty much give you fractional shares of each company. So if you buy one ETF, if you look at the top diagram here, you'll see that you'll be owning Coca-Cola, Microsoft, Nike, Walmart, Visa, all in one little fund. An ETF is a stock that owns many investments. ETFs can contain stocks, bonds, commodities, or currencies. Investors can buy or sell to each other. An ETF's price and falls are based on the value of what it contains. ETFs are like mutual funds but have key differences. So here's the key differences. ETFs trade all day long. ETFs trade like any other stock in your brokerage, which is a really good thing for beginners like you guys. And ETFs usually have lower minimums. You can just buy one share. So a lot of the mutual funds, you have to have like $3,000 in this one mutual fund, or $5,000 in cash to put into one mutual fund just to get into it. With ETFs, you can buy them just like stocks. Most of them are like $30, $50, $100, $300. We'll get into that in a second on exact ETFs and what we should be looking for. And you can also buy fractional shares of ETFs as well. All right, so here's some types of ETFs before we get into individual ones that we'll go over here. So the first one, you'll see an index. I like indexes. They're designed to track like the S&P 500, the NASDAQ. These are really good ones that I absolutely love. They're probably my favorite, but it's good to diversify, even though the key thing about ETFs is diversification. So the next thing you'll see is commodity, designed to track the price of a gold, oil, corn. So it's good to have a little bit of each. Inverse, designed to profit from a decline in the underlying market or index. I usually leave those alone. I focus on the index ETFs. And then I also like the foreign market too, designed to track non-US markets such as Japan, Hong Kong, China, because I don't do individual stock trading in foreign markets. So it's good to at least own some ETFs so I'm diversified. So let's actually look at some ETFs I own, and it might explain it a little bit easier. All right, starting at the bottom, you'll see VIG, VOOG, VOO, VTI, BND, VYM, VHT. These are some of my favorites. Most of them are Vanguard ETFs, which is an awesome thing. So this is dividend appreciation. So you'll see that they've been earning consistently over the past couple years. And if you go to Yahoo Finance, you can see how long the ETF has been around. Typically, you want at least 5 years in an ETF. So let's go to the next one. This one is made to track the S&P 500. So you always hear about the S&P 500. It tracks the top 500 stocks, And this is a growth ETF too. So you'll see some of them are value ETFs, some of them are growth ETFs, some of them are dividend ETFs. So you'll see that it has been growing for, pretty consistently here. And by the way, an important thing to note too is that most ETFs, they go up about 8% to 6%. So the last one was a growth one. This one's just a normal Vanguard S&P 500 ETF. This is a good one that I would recommend anyone to get into for ETFs. You can buy fractional shares if you want. It tracks the S&P 500, so it's basically like owning the top 500 companies in the world. And if one's not performing, they drop it out and they replace it with a different one that is performing too. So you're pretty much guaranteed to always make money with ETFs, is why they're so popular. And they are able to track like big index funds. So the next one, ticker symbol VTI, we have a total stock market. So this one just follows the total stock market, which if you believe in the stock market, it's a great one to invest in. The next one is a great one to have. I recommend this to everyone. If you want to own some bonds, which is always good to own some bonds in your portfolio, the Vanguard Total Bond ETF, ticker symbol BND, is a great one. I would love to set my a price alert for around, I would set it around $80, $82 a share on this one as well, because it's going to be going down in the near future here. So set it. This one's a good to get into it. Set a price alert. And a lot of these, also, if you scroll down in these ETFs, you can see a lot of them have dividend yields too, which is a great thing. This one I own about $500 to $1,000 on my other account, VYMI, International High Dividend Fund. This is going to be an international company. I don't own any like China stocks really. So this is my one ETF I own. So I'm diversified into these other countries as well. They also have a dividend yield of 3.7%, which is insane over the last 5 years. This is a newer ETF, but I do believe in it. I think it's going to be a good one. It's a Vanguard one, and it's down a lot lower. It's at a great price point right now. Even from when it IPO'd, it's basically the same thing like you're getting in at 2016. So I can easily see this one at new all-time highs. And this is just safe money. All these ETFs, the best way to think about it is just safe money. If you don't want to be a risky investor, if you don't want to have to worry about picking individual stocks and all, then that's really when these ETFs shine, especially when you don't have $5,000 to put into a mutual or index fund as well. So the next one here is the VHT. It's healthcare. So it's good to be diversified, not just in like the S&P or just in international. You want to be in these other things we're going over, like healthcare is a great one to be in too. So you'll see if you bought this in March, it has absolutely skyrocketed, kind of like all these ETFs are. They've been up like 30%. So the next one, you'll actually see Vanguard High Dividend Yield. It's just like the other one we looked at, but the other one's international. So this one's U.S. dividend yield. If you're a dividend investor, you like dividends, you want to get into dividends, this is an ETF I recommend. It's pretty much guaranteed to make 6% a year on stock growth, and then you get another 3.55% on dividend yield. So this one's probably make you around 8% consistently every single year without having to do anything, totally hands off. Again, that's the glory about these ETFs. The next one is going to be DIA, ticker symbol. This is going to be a Dow Jones Industrial tracker, which basically it mimics the Dow Jones. So it's a good price right now. I would honestly put my price alert for around $250. I would like to get into this one at. BLV, it's the long-term bond. So if you don't have the other bond that we went over and you're more long-term, I think this one has a higher dividend yield as well. That's a good one to look at. ARC Innovations. This is one that's absolutely exploded. If you got into this one in 2019 or early 2020, you're definitely on a come up. This is one that you're going to want to be owning for like 5 years or more, because ARK Investment, everything they do, they're looking at 5 years in the future from now or further as well. So they are a great company, but they've been exploded. I'll probably set my price alert around like $80, maybe even $70, but who knows if they even get that low again. Here's another dividend one, Power Shares S&P 500. This is a good price right now too. I think I just bought some of these. on my other account. Yeah, so you'll see I'm actually down 3.2%. I only put like 10 bucks in, which is kind of messing around. My other account, I have more. So this is a good one as well. You'll actually see it, I can see this one gaining 20% in the next 12 months, 12 to 24 months. And then also plus the dividend yield, you get 5.59% dividend yield on this one. All right, so here's an interesting one we're going to be talking about. Here's an REIT, ticker symbol VNQ, Vanguard REIT Fund. And REIT is like a real estate fund. So you're basically investing in real estate. You're investing in small pieces of real estate in the stock market, which, yes, you can invest in real estate through the stock market if you didn't know. It's called a REIT fund. So you see these like REIT funds, they usually trade parallel. So most of the growth is going to be coming from the dividend, which it's not that high of a dividend either. So I really wouldn't recommend it. The only reason I would is because it is a pretty good price point right now. And I can see this one gaining 20% in the next 12 to 24 months. Now, the last one we'll talk about is one that actually tracks all the energy companies. And guys, remember the ETF, it's not like an individual stock. They pull like 200 stocks or 100 energy companies or 100 real estate companies, the one we were talking about before, and they put it into one ETF. So you're owning several different companies. Now, the reason why this one's on the list too is because the price point it's at right now, it's very attractive at $39 a share. I think this one can easily be a 20% gainer again over the next 12 to 24 months. And you also get a 6.7% dividend yield on top of that as well. All right, guys, and to sum up the video, we'll read a quote from Warren Buffett on index funds / ETFs / mutual funds. They kind of lumped all together. Again, ETFs are more easier for beginners. Index and mutual funds, they have like a barrier to entry. Typically, you need like $3,000 to put into one fund. So he says the goal of the non-professional should not to be to pick winners, like individual stock winners, but should rather be to own a cross-section of businesses are bound to do so well. A low-cost S&P 500 index fund will achieve this goal, or an ETF. Like this one, for example, that tracks the S&P 500. He's saying basically if you're a non-professional, your goal shouldn't be to pick like these winners like that we've been talking about, all these individual stocks like Dropbox, Upwork, Slack. If you're a non-professional, that's not your job. Your job is basically just to own these S&P 500 like funds that mimic the S&P 500, and they're guaranteed basically to give you 6%, 7%, 8% or more per year as well. So guys, I hope that video kind of summed everything up, put it into kind of perspective on the difference between all these individual stocks that you're seeing now as compared to just owning an index fund or a mutual fund or an ETF in this case. It's a lot easier as well. So guys, if you enjoyed the video and you learned something new, feel free to slap a like on this video. Go to YouTube on this one as well. And what I'm going to be doing as well, the first 5 people to comment on YouTube, on this video, I'm going to be Venmoing you or Cash Apping you $5 each. Yep, so it's free money basically. Just go ahead and leave a comment. If you see there's not 5 comments yet, just think of it as 5 free bucks and send me your Venmo, screenshot it, show me proof. And if you guys want to join my close friends group, hit me with a DM. There's new information posted every single day on stocks I'm buying, what stocks I'm selling. So you kind of have an inside scoop of what's going on too. Until next time, guys, remember, don't time the market, buy the market. Peace.